Let's take another look at the U.S. futures, pointing to a bounce at the open after yesterday's struggles. Now, before the break, we were talking about the performance of both Canadian and American stocks. For a lot of investors, their portfolios have exposure to both countries, which means currency is another consideration for investors. Our next guest specializes in the issues Canadians living in the U.S. or with U.S. asset exposure have to think about. Tiffany Woodfield is a portfolio manager at Raymond James. Tiffany, great to have you back with us. Good morning.
Thank you. Good morning.
I guess before we get into those currency considerations, let's just talk about considerations for a very choppy, unsettling market and your general sense of what's been going on.
Of course. Well, it's interesting. I mean, we know that September is traditionally, historically, not a great month. But now on top of that, we've got inflation and we've got the economists trying to explain the inflation, the Fed trying to contain it. Then we've got oil prices, and when you look at the oil prices coming down, and we're looking at that wondering, will that continue? Because, of course, with the oil prices, that might be a good thing because gas prices could come down, it could filter through the system, and food prices could come down, so that would help for inflation. And then, as we talked about before, we've got the US dollar, so that is increasing against other currencies. And as you mentioned, the Canadian dollar, the loonie, is actually doing pretty well in comparison to, if you compare the sterling, the pound sterling, or the euro, we're actually, staying pretty stable. Obviously not like the US dollar, but we are doing not too bad, so it creates a little bit of a safe haven. And then on top of that, with everything, we've got this fear of recession. So I think what that does for investors is it just creates this overall panic, and everybody doesn't know, they think, I mean, realistically, everybody thinks when the market's falling that it's going to go to zero. And when the market's going up, they think it's going to go to infinity. We all know the market doesn't go to zero, and we know trees don't go to infinity. So really, it's trying to manage all of those fears right now in the market, and it is difficult for investors.
To your point, we're now seeing more cautionary comments from some of the biggest firms out there, Goldman Sachs tweaking their expectations, BlackRock as well. But our data-hungry partners at Bloomberg were very quick to look at when you start to see those very pessimistic stock market calls make their way to Wall Street and project it out to their investor base. Sometimes that's actually a buy signal. So obviously we'll find out what happens, but I get what you're saying. There's pessimism that's starting to get baked in a bigger way. Maybe if that worst case scenario materializes, it's warranted to see more selling. Maybe it's all a little bit overblown. Just in terms of the currency story, which you referenced, I do want to bring that into the conversation. We swap between Canadian U.S. stocks very easily here because it's very easy for investors to be investing on both sides of the border. What would be a comment you'd make on the currency consideration?
Well, it's interesting because right now what happens with people is they see that the US dollar is so strong and they think, okay, so I should just be taking all my Canadian dollars and putting it into the US dollars. Well, it's kind of too late. So what you really want to be doing is having a diversified portfolio where you do have some investments in the US dollar and then some in the Canadian dollar already, so that you're well positioned going into this. So like I said, it's quite interesting because I do find people panic and think I better go in and buy it. But like I said, right now, you'd be buying it with a Canadian dollar that's lower. So again, what you want to do is have that diversification, be well positioned when these things happen, and understanding why is everything going to the US dollar? Well, if you look at it right now, the US has their high interest rates. So people are investing their money into that. So that means that that is a good thing. However, you just, again, like I said, want to have a mix within your portfolio and have that balanced.
All right, let's go through some of your investing ideas on this Tuesday, Tiffany. It's an interesting group, which includes Emera, Canadian Apartment REIT, and Nutrien. The one I wanted to key in on first, Canadian Apartment REIT, only because in this inflationary environment and with the challenges in the home market in this country with rising mortgage rates, you keep hearing stories about what that's doing to the rental market. Does that factor into your thoughts around this one?
Well, actually, it totally factors into the market. So this is why we actually choose it. So REITs traditionally right now have actually been undervalued. Okay, so then when we're looking at that, we still have the pressure for immigration. And because of the costs of mortgages and interest rates going up, more people aren't able to afford to be able to buy their own homes. Okay, so what they're doing then, that's where these REITs have an opportunity. And not only that, with the mortgages on a REIT, they're not all coming due at the same time. So you might have them all coming due over a 5-year period. So they have a little bit more flexibility with that. And then if they've got new renters coming in, they can increase the rates marginally with those new renters coming in, but there still is a lot of demand for that. And not only that, they also have a great dividend, which gets you to be able to be paid while you're waiting. So we do feel like that's a great opportunity still.
Helpful context, and to your point, because I was saying off the top, the TSX overall making its way towards a bear market, but we've seen a lot of those interest rate sensitive real estate stocks that have already dipped into bear market territory because investors have been so jittery. But the long-term story on housing in this country is one you can't ignore. Emera was also on your list there. Utilities are an area we've heard a lot about in this environment, just the uncertainty of what's going on for people who are relying on dividend payments, et cetera. What's your thesis on that one?
Well, it's exactly what you're saying. When you go to utilities, it's sort of that safe haven, okay, is the way people think about it. I mean, you're looking at it and you've got over a 4% dividend. So that goes back to what I commonly say in getting paid while you wait. And Emera as well, if you look at, they've got the proposal for the Atlantic Loop project, which is where they're going to help try and get rid of the coal and do renewable energy. So it is a good company to be supporting. They've got that growth potential with it, and you've got a strong dividend. So again, with the utility, you're not just banking on the growth in the market, you've got the stability of that dividend as well.